All right, good morning, everybody. Welcome to Probability and Credit Spreads. My name is Don Kaufman. I'm going to be your host and trader this morning here at Theo Trade. I always give everybody just a moment. Make sure you're tuned in, turned on. We've done a couple of sound checks this morning, but we've had quite a number of people log on here in just the last moment or two. So, if you would, please let me know you're on over here. There is a questions section here today, a few things and a couple of housekeeping items right up front. You can ask questions. I'm reading it. You know, I'm standing right here. I'm reading it. Hello. Always feel free to chat in if you've got questions. Some of them I'll hold towards the end of the presentation. Next thing, is this presentation recorded? Absolutely, we record absolutely everything over here. So by all means, feel free, take some notes if you will. We'll also provide the slides after the presentation has been completed. We've also got a little spreadsheet for figuring out probability that we'll provide you during this session. The session today should run just about an hour. I try to be extremely prompt. I start on time. I try to end on time. If you've got questions, though, I'm here. It's a Saturday morning. My kids are barely awake yet. By the way, if you hadn't noticed, I'm kind of a morning guy. I like to get up early. I'm on Pacific time, so it's 7 a.m. bright and early over here. By the way, risk disclosure as I get started. We are not financial advisors or a broker-dealer. The reason I throw that up there, for the previous 15 years of my career, and I'll give you a little background on myself. Again, my name is Don Kaufman. I'm co-founder here at Theo Trade. I started trading in the late 90s in Chicago. About 2.5 years after I started trading and into my trading career, I predominantly was a derivatives kind of risk manager in Chicago. I was invited at the ripe old age of 24 to join a startup company. That startup company happened to be none other than thinkorswim. So yeah, I know it was a strange name. It was a strange name back then. It was thinkorswim. So I started with them. I think it was employee number 12 at thinkorswim, and remained with them through a number of different acquisitions. At one point, I actually ran the largest market education company in the world. I actually stayed on with thinkorswim through the acquisition via TD Ameritrade. I ran institutional trading education at TD Ameritrade, and just about a year and a half ago, I finally hung it up. I've had enough of the regulations in the brokerage industry. I mean, really, the Dodd-Frank bill changed everything in terms of how you could educate people. And eventually, of course, we launched Theo Trade here. So I do use the thinkorswim trading application in some of the examples. It is not a necessity. I just like you guys to know that's kind of my background in here. I've also done, quite a bit, CNBC and so forth. They pit me against Mr. Wonderful himself. Just for the record over here, I'm the short seller. He was on the long side of it. I shorted Apple, though, at 130.07. If you guys have actually followed me from the trading days at, thinkorswim, I used to host some daily broadcasts there at thinkorswim. And I've always been a pretty avid short seller. Anyway, it's one of my more memorable trading experiences over there, because it's not often you get in front of a few million people and get to say, I shorted it, he was long, I was right. And, well, that's where we start today. Trading is not about being right or wrong. Not at all. It's about me being right and Kevin O'Leary being wrong in this case. Anyway, with that, let's jump into the bulk of today's presentation. Again, I thank everybody for joining us. We're going to talk a little bit about learning to sell options. Okay, so yes, options. I said the O word. I think many people, though, have come to the realization to generate returns in a market, there's a lot more than just trading stock. However, I want to digress for a moment with the learning to sell options and say, what I'm going to talk about today, some of the concepts I'm going to talk about today, this transcends the idea of just options trading. What I discussed today, it's about the right trade logic, okay, and using probabilities to assess your trades, whether you trade stocks, whether you trade options, whether you trade futures, okay, what I discussed today becomes prevalent in all variety of products out there. And that's where I like to start, so that if you have no experience whatsoever, again, it's great. Those of you that have some experience, have traded, you're going to pick up a lot of finite skills. Those of you that have no experience, you're going to pick up big, broad strokes of logic. Learning to sell options. So many of you have kind of heard through the grapevine, selling options is the way to make money. Got to ask this question. I like to keep these sessions a little fluid here. Feel free to chat in there. Have you guys heard that before? Selling options, it's the way to make money. Well, if you've experimented with selling options, you're going to figure out pretty quickly, yeah, there's risk in there. Because when you're wrong, you're wrong kind of big. Today's session, I just want to separate the myths from the real risks, the facts from the fiction, and everything that surrounds selling options premium, because there's a huge amount, if you will, of misconception about what that really means. You hear like tons of options expire worthless. Well, yeah, that's great, but let's get into it. And again, a couple of people are like, yeah, I've kind of heard this. So moving onward. Don't panic. You can do this. There's a couple in-depth concepts that I'm going to go through today. And you may know nothing about options, and that's okay, though, for today's session. Again, for starters, big concepts. If you've never traded an option before, I'm going to start talking in a moment about probability. Think about probability and risk, okay? Probability and risk. We're going to dive right in. For those of you that are experienced, you're going to be grasping a little higher on the learning curve what I talk about. You're going to be grasping criteria. And what criteria means, you'll hear that term criteria throughout the course of today's session. It means what are the nuances, okay? What's the recipe to drive the trade? And today I'm going to talk about the structure of the trade. I'm going to talk about probability. But again, what drives us is going to always be criteria. When I say what drives us, I mean you have to follow some logical path, a recipe. You're going to bake a cake. The first time you've done it, you got to use a recipe. If you want to trade a spread, the first time you've done it, you got to use a recipe. And that's some of what we're going to get into today. So probability and profitability. You're trading, whether you like this or not, it's based on probability. You and I can create trades all day long, all day long, with a 90% probability of success. Yeah, and you can still lose money. That's one of the things I throw out there all the time. And so I'll draw on the screen a couple times though. 90%. People always look at that. You can go to umpteen different websites right now. And I've been in the industry for a very long time. And for the previous 15 years, I was regulated like first name basis with people at FINRA and the SEC. Not on a bad note, not at all. But you can go to websites all day long, and these websites say, come, learn from me. I will make you right 90% of the time. You do realize, and I want everybody in here to be like, yeah, I get it. You've got to realize that is garbage. I can teach you how to be right 90% of the time in 2 seconds. It doesn't make a difference. You'll be right 90% of the time. And if you understand trading, what's going to happen to you the other 10% of the time is all that matters. And what is going to happen to you is going to be horrific. Probability alone does not make you profitable. So I don't want to hear like, I was right 90% of the time. Anybody can be right 90% of the time. You're going to find that out here in just a moment. Remember that. And I start with that because it's like one of the biggest myths, and it undermines, okay, trading when somebody thinks, well, all I have to do is be right 90% of the time and I'll make money. That's what the market wants you to believe. Okay? It is not reality. We okay over there? Anyway, yeah, has anybody heard that one before? You're going to be right 90% of the time. Okay? Never confuse being right with making money, because the two, again, they don't share a common thread. Let's go. Markets. They're always going to be a trade-off. Everything you do in markets is going to be a series of trade-offs. Higher probability, always. And I say this without unequivocation, equals higher risk. There is no free money out there. You can be right 90% of the time, and again, you can still lose money. Why do I mention that 3 or 4 times? Because I think when people come on to a webcast like this, they expect, here's the miracle, okay? No miracle. You can find edge in a marketplace, but you're going to have to understand some criteria and the right trading logic. Right? And that's what I really want to harp on here is the criteria, the right trading logic. Again, you could be right 90% of the time. You could still lose money over there. It's not about being right. It's about the right trades time and again. I mean, so where can you find edge? Where can you find edge? Right? Is that what you guys are here for? Anybody? Anybody? It's pretty quiet out there today. So let me hear ya. I mean, that's what we're going to be discussing. So I'm going to show you really something very, very important. And we're going to start with probability. I mean, everybody's here like, yeah, let's figure out, how to make a couple of bucks over here and not take a tremendous risk. And I think you're going to be surprised to find out your edge in this business is not going to be, again, what you think happens in the market. See, every single day you're bombarded. By the way, this is discovering the curve. Every day, okay, you turn on CNBC, you turn on some other webcast, and they're bombarded. What do you think the stock is going to do? What do you think the stock is going to do? I think it's going to go up. I think it's going to go down. Come on, I've done the CNBC thing too. I'm telling you right now, I come from the professional side of the trading industry, okay, the institutional side. And before me, I had a number of family members that traded in markets all the way back to 1974. Okay? And I like it. Somebody said they're bobbleheads. They are. They're bobbleheads on TV. Traders, they don't worry about the directional bias. People focus all the time. I have the next greatest charting software out there. Okay? The dark ages of 1974. You're right. Trading, though, it's about probability. It's about probability and profitability. Here we go. Discovering the probability curve. So here's a $100 stock. And bear with me because some of you may or may not be familiar with this. Even if you're familiar with it, I think you're going to learn something here. If you look at trading, I always like to describe trading in this fashion. Okay, and that is, for the most part, here's a $100 stock. And every stock, I mean, it doesn't matter what stock it is. We're actually going to call the stock stock. All right, so the stock is actually called stock. That's the name of the company. I want you to think about what's the chance of going down to 90 versus what's the chance of getting up here to 110. I mean, you don't have to give me exact probabilities, but I want you to think about it on a logical sense. So what's the chance of getting up here versus down here? And the answer basically is this, pretty much the same. Assuming that you don't know anything, and what do you know about markets? Whoa, I know I've looked at the MACD and the Fibonacci, okay, but you don't really know anything. And if you do know something and really do know something, you're going to end up with Martha Stewart, right? That basically means bad things. So you look at probability, look at it as the curve. Look at it as a, pretty much a 50-50 shot whether the stock goes up or the stock goes down. And that's okay. So if I also asked you, right now, what's the chance of the stock going up versus the stock going down, you got to say it's about a 50-50 shot, although there is a probability it stays right at 100. So, well, there's a 50% chance going up, 50% chance of it going down. I like in trading when we start with this. Because and again, people come out and they go, well, if there's 3 green candles followed by a red candle, that's going to mean this. How insane does that sound? Okay? You're like, I followed a couple of green candles that look like this, okay? A couple of candlesticks followed by a red candle that looked like this. That is absolutely a bearish pattern. It's insane, okay? Looking at the chart, what is it doing? It's driving your car home by looking through the rear view mirror. How is that fared for you? Driving your car, looking through the rear view mirror. Oh yeah, the windshield, by the way, is blacked out. All right? This is one of the most critical things, though, to understand that the trading is going to be much more about probability. Clear this screen really quick and bring it up over here. Now, I can't necessarily tell you, okay, what this stock is going to do, but I can tell you with a degree of certainty. For instance, what's the chance of the stock getting up to 110? What's the chance of the stock getting to 115? How can I possibly do that? Options. What options really are, it's not what people think. If you look at like the 110, and again, some people have no idea what an option is. That's fine. This is 110, and we're going to say a 110 call. A 110 call. What's the 110 call give you the right to do? The 110 call will give you the right to buy the stock at 110. Let's say that call costs us $1. Okay? Forget about the 115s over here. The 110 call is trading for $1. What do you pay for it? I pay $1 for it. What's the most you can lose? I can lose $1. Forget about the dollar. See, people look at options and they look, well, it's only going to cost me $1. Forget about the dollar. It's only going to cost you $1. You better realize that $1 equals a probability. Options aren't just price. Price is probability. So what that basically means is if you can say an option's $1, I can tell you that option, okay? And just give you a quick, like, and dirty example here. That option might have an 80% chance, okay, of never getting to 110. What does that mean? If you buy the option, you only have a 20% chance of getting above 110. Now I know I've left you like that's like wide open for interpretation. Probability and price are actually the same thing in trading. You can actually solve for probability. Now, we're going to take it into a real example in this case. Now, forget about ever owning the stock. Stop right there. You're never going to own the stock in this next example. I don't want you to own the stock. I don't even want you to consider owning the stock. We're just going to go out there and we're going to sell an out-of-the-money option. Selling out-of-the-money options. And I'm going to explain it in a couple of different ways. Similar example. Okay, we're going to draw on the screen a little bit. Here's a stock trading at 100. Now, again, the stock itself is at 100. Now, again, we do not own the stock. We never had anything to do with the stock. We're going to go out and we're going to sell a 110 call for $1.50 credit. Now, one of the first questions that comes up, people go, how can I sell something? I never even owned it. First of all, options, you can buy them and you can sell them. Options are contracts. One person is the buyer, one person is the seller. How can you sell something you never owned? You are selling yourself into an obligation. If you sell a 110 call, well, first, let's look at buying the 110 call. If you buy a 110 call, it gives you the right to do what? Buy the stock at 110. If you sell a 110 call, it obligates you to deliver somebody's stock at 110. So you're like, wait, but I don't even own the stock. It doesn't matter. You can go out right now in the marketplace. You could sell a 110 call. If the market were open, you could sell a 110 call. And you can sell it for $1.50 credit. Now, we're going to come down here. We're going to take the $1.50. And that equals the credit. That's it. When you sell something, okay, we're going to go out here and again, we're going to sell a 110 call, and that 110 call is trading for $1.50, and that equals the credit. If you sell something for $1.50, what's the most you can possibly make? If you sell something for $1.50, what's the most you can possibly make? $1.50. Now, options do trade in contracts, but I'm telling you right now, don't even worry about that. It doesn't matter for today. They trade in contracts. This means you got to trade a minimum of one contract. So the most you would make on here is $150, or let's just call it $1.50. That's on a per share basis. So you collect your $1.50. That's it. That's the most you can make. This is like selling a car, right? If you sell a car for $20,000, what's the most you can make in the car? 20 grand. You can't sell a car. Nobody comes back to you a week later and goes, wow, that was such a nice car. Ooh, yeah, I'm going to give you another 5 grand. Doesn't work that way. You sell the car for 20 grand, the most you can collect is 20 grand. You sell the 110 call for $1.50, the most you can collect is $1.50. But why do you do it? Why do you sell, okay, the 110 call? Well, for right now, forget about the credit. Yeah, you're selling it because you collect $1.50, but here's the reality. Here's the reality of why you're really selling the 110 call. And I hope everybody's okay at this point. Everybody all right? Because again, It's going to get a little bit more, a little deeper after this, but the reason that you're selling it is this curve right here. The stock is currently trading at 100. At 100, we know there's about a 50-50 shot of going up or down. Remember, all right, options, probability. Options, probability. Stock is also probability. So here at 100, there's a 50-50 chance of going up or down. There's not a 50% chance, though, of getting to 110, because to go to 110, you got to go where? All the way up to 110. And if you think about that, that's kind of a long run. Let's say, in this example, and if you look at this line right here, that's the line in the sand. We're going to call that like our break-even point. Let's say that there's only a 20% chance of getting all the way up here, because this option is pretty far away from the stock. There's only a 20% chance of getting there. Now, I can show you exactly how to figure out that 20%, which means you tell me, what's the probability then of being below 110? And I'll show you how to figure out the 20% in a second. But what's the probability of being below 110? It's 80%. So you have an 80% probability of being down here. So there's an 80% chance in this particular trade of keeping the $1.50 credit. However, see, this is what's like so alluring about probability. Somebody comes in and they go, I'm going to make you right 80% of the time. Oh, heck, I can make you right 90% of the time. Just sell something out here. What's the problem with this? If you sell a 110 call and you sell it naked, it's just as bad as it sounds. You are swinging out there in the breeze. You are naked. You realize the stock is trading at 100. What if the stock jumps all the way to 150? Could a stock go from 100 to 150? Yes. What would you call that stock? Netflix. All right, so the stock goes from 100 to 150. You're short the 110 call. You have to give somebody stock at 110, and you don't even own the stock. Stock now is at 150, so what do you have to do? You have to buy the stock at 150 to give somebody the stock at 110. What do you lose? I'll tell you exactly what you lose. You lose $40 per share, but you collected $1.50 on the trade. It doesn't matter at that point because you got toasted, and you can't do that. And that's why probability alone doesn't make us profitable. All right, I can do trades that have an 80%. I can do a trade with a 95% track record. I can show you in my account right now, in my brokerage account. Here's trades that made money 90% of the time, but it doesn't mean you're going to make money. And that's one of the things. Like if you get anything from today, from here on out, if you ever hear somebody's right more than 50% of the time, you got to turn around. You got to tell them, good, it doesn't even matter. That's wonderful that you're right 90% of the time, okay? But being right, probability, doesn't mean you're going to make money. Think about that for a second. It's garbage. Now, let's go a little further. Dun, da, da, da. Let's actually use what's termed a spread. A spread will control the risk. It's called risk mitigation tactics. All right? Now, here's the stock trading at 100. And once again, we are never going to own the stock. We don't need to own the stock. Now, you could own the stock, and there's a bunch of strategies I could teach you around stock. Where's the fun in that? We want to learn to make small incremental gains to the account. That's how you grow an account. Higher probability, incremental trades. Trades that don't put you in extenuating circumstances. Trades that have higher probability, but also control the risk. So now in this example, we're going to go out there once again and we're going to sell the 110 call. Remember, selling the 110 call, what is it right to do? Well, it's not a right. It's an obligation. We sell that 110 call, okay? And don't even worry about the $1.50 credit. We don't have to worry about the $1.50 credit. Why don't we have to worry about it? Because options are actually probabilities. That's where we're going to lead you to today. So you sell the 110 call. You're obligated to give somebody stock at 110. But you're simultaneously going to be buying the 115. Now, don't let all the context of the trade get you confused over here, right? You sell the 110 call, you buy the 115. You're obligated at 110, but you have rights at 115. Think about that. So what happens? Somebody can take stock from you at 110, but you have the right to take stock from somebody else at 115. This okay, is what we call, again, this is what we're going to call a $5 wide spread. It's a $5 wide spread. Yes, that's a 5, not an S, I promise. It's hard to write on the screen. It's a $5 wide spread. For that $5 wide spread, how much risk do we have? We have $5 of risk. But if you sell something for $1.50, but then you buy something for 50 cents, your net credit on this spread is $1. If you take $1 in, the most you can lose is $4. But in this trade, let me enunciate. The most you can make is $1. The most you can lose is $4. Everybody, the first time you see that, you're like, I don't like it. Why would I want to lose $4 to be able to make $1? I'll tell you why. Because this trade right here has over an 80% probability, all right, of making the dollar. It's an 80% probability, okay, of making the dollar. Think about that for a second. That's one of the keys. It is a higher probability trade, but now it also has risk that's been mitigated. Mitigation of risk just means you're controlling your risk. It's just selling it out of the money spread. Now, some of you have experience in spreads. You're like, yeah, I get it. Well, you're going to want to know how we're going to calculate probability. You're going to want to know all the steps to be able to calculate probability and to get you to the right spread. That's what I always talk about is you can go on Google right now. You can Google, all right? You can Google anything. Literally, you can Google anything. But you can go on Google and you can figure out a spread. Okay, this is just a short call spread. You can figure out what a spread is in, I don't know, umpteen different ways. But you know what they don't teach you? They don't teach you what's the right probability for the spread. They don't teach you what's the right expiration. I mean, have you guys looked at option chains lately? Just for a moment, look at an option chain. Here's an option chain on Apple. There's 6-day options and 13-day options and 20-day options and 27-day options and 34-day options and 41-day options and 48-day options. Oh my! What's the right expiration? We got to figure out the right probability, the right expiration, okay? When are earnings coming up? Don't worry, we'll discuss that as well. That's the kind of stuff that you have to know. Now, if you've gotten to this point, I always like to do like a quick stop, check, make sure everybody's okay. If you've gotten to this point, you get that number one thing, okay? And I'll recap here real quick. Number one thing, we're selling out of the money options. And the reason we're selling out of the money options, because the probability of getting up here in this curve isn't very good. There's this huge probability that we stay down here because the stock could even go to 109. Now, if the stock goes to 109, you're like, no, stop! Because if it gets above 110, you're going to start to, freak out a little bit. So the fact of the matter is, though, when you look at something like this and you realize you're like, I kind of like it. The room, got a little bit of room to play. The stock goes down. Can the stock go down? Yes, it could be down here at 90. It could be down here at 80. It could be down here at 70. Call it Apple. But it could also be up here, okay, at what? 105. And you're like, uh-oh. But you don't really start to get freaked out until the stock is at what? Like at 109, you're getting scared because you sold a 110 call. But that is how we're going to learn how to deal with this. If the stock does go to 109, what happens if the stock just jumps from 100 to 120? The stocks can jump. It's gapping. It's a gap-filled wonderland out there. Now, to continue on, if you have some of the logic down, let me know. If you get like the general premise, all right, we're selling out of the money options because they have higher probability. Yeah, I got it. Because now we're going to step forward and we're really going to start to get into how probability works. All right. With that, now we're actually going to produce a short call spread. Still fairly quiet out there. A couple. All right. Okay. Got it pretty much. That works too. All right. Pretty much I'm all right with that because we're going to go through example after example after example. Here's a stock trading at 200. And the stock trading at 200, we're going to sell a 220 call. It's a very similar example to what I did, but now I'm actually bringing it much more into the context of the marketplace. Now, once again, okay, if you think about that curve in your head, here's the stock trading at 200. We're selling a 220. That's what? $20 away. So we're going to sell the 220s and then we're going to buy the 225s. The whole trade is being done for a $1 credit. And you tell me, how wide is this spread? We're selling the 220 call, which obligates us to deliver stock at 220, but we're buying a 225 call, which gives us the right to buy the stock at 225. How wide is the spread? You got to know this. You got to know this. It's a $5 wide spread, of which you collected $1 up front. Now tell me, what is my definitive out-of-pocket risk? What's my definitive out-of-pocket risk? Anybody? $4. Got it. Now, if you have these three items, you got the credit, you got the width, you got the risk. You got the credit, you got the width, you got the risk. Credit, width of the spread, $4 is the risk. If you know those items, you got probability. How do I know that? Probability of success is $1 credit. To figure out probability, all you got to do is take the risk divided by the width. What? You know, it's that easy. I can go through the calculus to show you how to do this with area under the curve. Sadly, there was a time in my career where I had to know that. However, all you really have to do on a spread, price and probability are the same thing. So if you know the price of the spread and you know actually how to look at this, you just take $4 divided by $5, which equals 80%. You're like, oh. And the break-even point is 221. Now, if you're kind of weirded out by that, don't worry. We're about to go through real examples. Real examples in the marketplace. Are we having fun yet? It's kind of cool. I mean, because people have looked at spreads forever. And if you've used any trading technology, all the trading technology out there, they all have like deltas and they've got probability calculators, and you know, if you've ever looked at like the probability calculators on something like thinkorswim, I'll put some of those things together. But I will tell you this, don't rely on any of these probability calculators. Rely, okay, on dividing the what? The real risk divided by the width of the spread. Why? Well, I'm going to show you that. Probability of success. Calculating your spread's probability of success. Take the real risk in the spread divided by the total width of the spread. The probability calculation details are as follows. Now, again, for years, for like the previous 15 years, you know, people, they go on to something like thinkorswim, and listen, if you're on thinkorswim, phenomenal. Okay? If you're on Charles Schwab, great. Whatever does it for you. You know, if you're using interactive brokers, fine. Okay? It's all fine and dandy. But there's one thing. You have to learn how to use everybody's technology. And I've come to the conclusion that not everybody knows how to use the thinkorswim Analyze tab. I mean, the Analyze tab on thinkorswim, come on. You look at this, and the first time you look at it, you go, that's the end of me. It's the end of me. You know, I'm like, that's it. I'm done. Chicken is done. I want nothing to do with this thing because it's a little bit of a beast. All right? Again, the Analyze tab, it's my baby. And the Analyze tab, I mean, it actually may be my brother. I have a real brother, but the Analyze tab is the, you know, the other brother. But at the same time, like, I wanted a way to make it easier for people to do this without having to use the technology. And then we have people that don't have a TD Ameritrade account and don't have a thinkorswim account, which is fine too. So we built a spread calculator for you. And I'll show you how to use the spread calculator. I like it. Somebody came in and go, I avoid it at all costs. Does anybody else have that? You've been on thinkorswim, and you know, if you haven't been on there, it's okay. So I don't want to alienate you if you're not on TD Ameritrade. I use it a lot. Why? Because, you know, it's part of my baby. So I have 3 real babies, but you know, thinkorswim was always my the first child. I'll show you the calculator though that we built over here because it's so easy and it makes figuring out spread probabilities even easier. But I'm going to actually show you how to do this by hand. Okay? Here is a short spread probability calculation. We actually have a real spread in here. It's on Google. So I'm going to mark the screen up a little bit to show you how to do this. But this is a real spread. And yes, the screenshot is taken from thinkorswim, right? Look, how wide is this spread? Well, I'm selling, see that minus right there? I'm selling the 790s. I'm buying the 795s. Okay? It's a $5 wide spread. of when that $5 wide spread. Listen, this is a real trade. I received a $1 credit. I keep doing the same example again and again and again and again to show you, okay, that in the marketplace you can find this example all day long. This is the width of the spread, is $5. The credit received, of course, is $1. So the total risk, which is called the width of the spread, right there is $5. The real risk, okay, that's the actual amount you can lose is $4. Real risk is the width of the spread minus the credit received, right? What do you have? Just take $4 and divide it by 5. It comes out to 80%. So that trade has an 80% probability of making 1 penny or more. That's it. Okay? You guys okay so far? Let's do another one. We're just going to hammer this. Let's do another one. Let's do another one. Now, let's say that you went on to a trading application. And you go onto the trading application right now. And when you do go on a trading application, which we're going to do here momentarily, it's a little bit of a daunting task. You hop on here. Forget about like Apple. You know, Apple, that's easy. Seriously. Like Apple's not that bad. It only has 13-day options and 20-day options and 27. Oh my. Okay. What happens if you go into a product like the SPX? The SPX, the granddaddy of all the products. Look at this. 4-day, 5-day, 11-day, 13-day, 19-day, 20-day, 25-day, 27, 33, 41. Hike. It's crazy. There are so many different options in there. You open up an option chain. If you open up the full chain, do you realize that there are over 1,000 strikes, okay, in most expirations? It's insane, okay, how many options are listed on options. Look at these 33-day options. I can scroll for a half an hour here to show you all the different variations of this trade. Now, all you have to do is, and again, I'm going to lead you to the right trade with the right criteria, but all you're going to have to do is you will input the correct, okay, bid and ask on both the sell and the bid and ask and the buy. Tell if it's a call or a put, and it'll give you, and again, I want to show you what the probability calculator does. It'll give you the probability of success in the trade. All right? It will do all of the probability calculation for you. Now, yes, it's easy. You could just divide, 4 by 5, but it's not always going to be that easy. There's going to be times where you got to actually go in there. And again, here's actually the spread calculation. Like this is the actual spreadsheet. I go in here and I just put the bid and ask, the strikes. The strike is the 765, 770. Okay? Whether it's a call or whether it's a put. That's just a drop down. It's a call or a put. Why did we put this together? Okay? The gentleman that works with us here at TheoTrade, one of the other main instructors here, his name is Doc Severson. Doc! Okay? So there's stock and then there's Doc. Doc actually is like the spreadsheet magician, if you will. I just thought this was easier than having to go on a thinkorswim, which scares the crap out of people, but not everybody has thinkorswim. And I wanted to develop a probability of success calculation that isn't intimidating. And sometimes, like cheesy little spreadsheets, it's the way to do it. Okay? The spreadsheet alone is, it's incredibly invaluable, and that's why I gave it to everybody in here to make sure that you just know, like, oh, I don't have to go through that. Let's do another example. Okay? Do another one. We're going to do a trade in Amazon. Now, I took this screenshot. I don't know, about a week ago. Amazon is trading in and around all-time highs. Do you want to see the chart? Let's have fun with it. Come on. Let's go look at a chart on Amazon. By the way, Amazon, it sold off a little yesterday. It had a good day, and then it had a bad day. But I love to do this because I look at the chart. What does the chart tell me? Come on. All right, I want you to think of the chart as what? Driving, looking through the rearview mirror. Here's the rearview mirror. Okay, what do you got in front of you? You got one of these. That's called a probability curve. If you've never seen a probability curve, you can go to studies, add study, volatility study, probability of expiring cone. It's one of my favorites. This is my baby. Okay, if you ever wonder like where some of this stuff comes from, okay, it comes from a man with too much time on his hands. No, it comes from somebody like me that, again, recognizes trading's more about probability. You don't know whether we're going to go up or whether we're going to go down, and that's just the reality. But you can still do high probability trades, and that's the key in here. I can make you more effective in directional bias. But first, we have to make you much more effective in the strategy you use. Strategy has always got to be put first, not direction of the markets. Right? Some people are bullish, some people are bearish. Let's sell an out of the money spread. I'm actually going to do a bearish trade on Amazon. So Amazon here is trading up at 724. Okay? And I'm going to go out and I'm actually going to sell out of the money options. And then I'm going to buy another option to hedge the option I sold. Why? Because, yeah, it's at 724. You might still be bullish, and it may still go up a little bit. But look at all the room and the probability of it going down. Got it? I hope you do. Because, I mean, again, could I do a bullish trade and sell some stuff on the put side? Yes, I could. But for today's example, it's just easier to do the same thing again and again and again and again. Why? Okay? You get good results, and you stick with the good results. Get good results, stick with good results. Here we go. Amazon. And we're going back a few days. It's okay. Because why? Trading never changes. This is a screenshot that I took. Amazon, the other day, was trading at 724. Now, this is no longer Amazon. Let's call it stock, because it doesn't matter that it's Amazon. It's trading at 724. And Amazon's intimidating as can be, a $724 stock. I'm going to go out and I'm going to sell a 765, 770. We sell, okay, the 765s. By the way, this is supposed to say 770. I'm so sorry, okay? I messed up on the screenshot and didn't fix it. So we buy, this is the 770s. We sell the 765s, okay, we buy the 770s. Let me ask you guys something. How wide is this spread? How wide is that spread? It's a $5 wide spread. Once again, we have done a $5 wide spread. What's the credit received? $1.12. You know, it's not always perfect. I'm sorry. It's $1.12. It's not a dollar. What's the risk in the trade? $3.88. Now, if my math is correct, we should be able just to solve for probability in this trade. Okay, let's go do it. Take all the variables. Amazon is at 724.57. We're selling the 765 calls and we're buying the 770 calls. The net credit, $1.12. Max risk, $3.88. With the spread, $5. Identify those three. Credit, risk, width of spread. Take the width of the spread, okay? The max risk divided by the width of the spread is 78%. 78%. That's it. That's how you figure out these trades. Now, one last one. We can go on to the screen. You guys tell me your example now. Tell me any stock you want. Make it a big name company everybody knows, all right? Big name company. And I love it. Fred's already asking the right questions in here. He's like, what are the right strikes? Ooh, Netflix. Somebody wants Netflix, Netflix. Could we do Netflix? Yes, we could. Facebook. Oh, don't even make me. Oh, there's a couple of price lines in here, but you want to do Netflix? Fine, let's do Netflix. Let's dance, Netflix. I can come out to the 41-day expiration. And I'm going to show you something inside of Netflix in a few minutes, but I'm going to come out to the 41-day expiration, and I'm going to look, and I'm going to go, and I'm going to say, well, we could sell these, okay? All right, and again, I'm just going to ballpark it over here. So what do we sell? We sell the 101s. We sold the 101s. Stock's trading at 93. We buy, for instance, oh, this is funky, the 103s. This is going to be a little harder because this is a what? What's the width of the spread? Here? What's the width of the spread? You tell me. Width of the spread right here is what? $2, of which we received 54 cents up front. Okay? How do we figure it out? How do we know the risk? You got to tell me. When you hit confirm and send, sometimes it'll show you, well, it's $1.46 of risk. So, take it through a calculator. We have a trusted calculator right here. Take $1, okay, 46. Now, the $1.46 is the what? That's the real risk, right? $1.46 divided by the width of the spread. The width of the spread is $2. $2 equals 73%. Dun, 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 dun. There's a 73% chance of making 1 penny or more in that trade. Done. Okay, moving on. Somebody wants to do price line. Now, I'm going to tell you right now, price line, you're not going to like what I'm going to say. This won't fit the criteria for one of our trades. There is a piece of criteria in here that just will not fit. Netflix as well. If I did the Netflix trade, it would not have worked on our criteria. And I'm going to show you why both of these wouldn't work. I'm going to actually make Priceline really, really easy for you. There's no liquidity. If you trade this underlying, you lose money. How could I say that? Well, I worked for a firm. We made markets for umpteen years. Okay, I can look at an underlying and tell you, if you continue to trade this product, you will lose money. Doesn't matter that it's a $1,300 stock. It matters the bid-offer spreads are wide. You got to know that in your criteria. You got to know that in your criteria that if you continue to trade something with zero volume, zero volume, look at this, even in the 6-day options, no volume out there. Okay, done, dead, don't even consider it. Moving along. Okay, somebody mentioned, like Facebook. Facebook. Going to Facebook over here. Let's go, like, again, we'll just ballpark, okay? And I'm winging it right now. And let's open up a few more strikes over here. Let's open up like 20 strikes. When I say I'm winging it, literally, okay? I don't know if this one's going to work over here, but a spread is a spread is a spread. If you know how to calculate a spread, we'll figure out if it works. Let's do a $3 wide spread. That's funky. 67-cent credit. 67-cent credit. $2.33 of risk. Look at me. It's a $3 wide spread. You collected 67 cents up front. It's $2.33 of risk. Okay? All you got to do is come into the calculator, take $2.33, divide it by what? $3 equals 77% probability. 77% probability of what? Of making 1 penny or more. That's it. That's all you got to do. And by the way, there's a probability calculation here on thinkorswim. You don't even need to use that. Your probability calculation is going to be more effective. All right? Your probability calculation is going to be more effective. I could do it on the TLT. Any one of these trades I can do. But here's the thing you got to realize. Back to the Amazon trade. I just did umpteen trades. I pulled out one that was 80%. I pulled out one that was 78%. I pulled out a trade that was 85%. Here's what you got to know. 78% probability and the 22% hammer. What's that even mean? 78% sounds great, but 22% of the time the market is going to rip your face off. That, ladies and gentlemen, is a real trading term. If you've never heard that term before, by the way, that predates me. That's not something like, I came up with. That's actually been around since like the Jesse Livermore days. No joke. Markets exploding in your face or ripping your face off. When you trade high probability strategies and you're wrong, you're going to get hammered. All right? The market is evil enough to allow you to make money 3 or 4 times and you increase your contract size. Think about this. How many of you in this room right now have ever done one of these spreads? How many of you? Okay? Come on. Admitting it is the first step today. So, okay, a lot of people have done these spreads. This is exactly the progression. If you've done them, okay, if you haven't, fantastic, because I'm going to show you the right way to do it. But if you have done them, this is what the market does. You sell one and make money. 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 You increase your contract size. Why? Because if you've made money, when you're doing high probability trades, you're going to make money, make money, make money, make money, make money. And the market lures you and it goes, come on, a little more. A little more, boom, train wreck. Your losses are going to exceed the gains in the previous 3 trades. Right? You just got your lunch eaten for you. You think I don't know that? I know! It's like I could see your account. For the previous 15 years, I did. It's what I used to watch all the time. Okay? One of the reasons, that we're doing this at TheoTrade, this is what I would call like uncompromising education. Let it be known, I looked at accounts for 15 years. Not just individual accounts, let it be known, I was capable of doing research on millions of accounts. We'd actually do research, and we know exactly what people do when they sell spreads, where they go right, where they go wrong. One of the things that people do wrong, increasing contract size, they think I actually know how to manage risk. They don't. Okay? And I know that some of you are looking at this and like, that's exactly what I did. I got hammered. And I don't like selling options because I got hammered. Hopefully you at least tuned in at this point. And then you think to yourself, well, there's got to be a better way to do this, right? You go, I can fix it. I know I can fix it. Let me tell you about fixing. It's a very, very dirty word in trading. 15 years in the brokerage business, I'm totally cynical regarding good trades gone bad. That's what I call them. Good trades gone bad. anytime you are fixing a trade, okay, there's two constants in this marketplace. You fix a trade, you are adding more risk to an already losing trade. What's the first thing somebody tells you? Okay? What's the first thing somebody tells you to do when you're losing on a trade? Don't add more risk. They go, I'm not adding more risk, sir. I'm fixing it. That's ridiculous. You're just going to, what? Add more risk to an already losing trade and racking up more transaction costs. Yes, some fixes may work, but the very notion of fixing a trade throws good capital after bad. Think about it. Yesterday's trash. Take your car and I want you to drive it off of a cliff, not literally, figuratively, and bring it to a body shop. What are they going to tell you? They're going to tell you the same thing about the car that I'm going to say about your losing trade. It's a piece of crap. Let it go. You got to learn to do this the right way. You got to have the correct trades, the correct criteria. You got to learn that you don't want a good trade gone bad, okay? And it's important that you understand that, all right? And again, it makes me ever the cynic when I am talking about selling spreads, because people, they'll go out and they'll sell spreads. I can fix it over there. You guys want to learn how to sell spreads and how to control your risks the right way? Let's discuss some criteria. This is what TheoTrade does. TheoTrade, we call it recipes in trading. Okay? That's what we do. That's what I do. That's what all of our trade instructors do. You can always figure out what a strategy is going to be. Again, there's 1,000 different websites that you can get into that are going to tell you what a spread is. But they don't tell you there was like step 1, step 2, step 3. For example, trading is about answering the what ifs. What might be a good stock or ETF candidate for me to sell a spread? You already saw me balk at what? At Priceline. I told you why. What's the correct options expiration cycle to sell my spread? How much capital do I commit to generate short spread premium? Think about it. Here's the ones everybody's got. The expiration, that's a huge one. Get the wrong expiration, done, dead. What's the strike price to sell? Like, why did I sell the 765s in Amazon? You can't reverse engineer the trade because every trade is different. What strike price options do I buy? Okay? We answer the questions. What's the right probability for my trade? Now, we did some trades around 80%. One of the key things, you better be able to key into exactly the correct probability in a trade. How many option contracts do I trade for my account size? All right? When do I close short spreads, whether they're going for me? What if the stock sells off big? Do I bail out, in a short spread? Oh, what if the stock rallies massively? Can I fix a losing trade? Actually is an area, okay? There's an area I'll talk about. It's not a fix. You guys are going to be very surprised as to where we go with that, okay? And we have the answers to all of this. This is what we do. TheoTrade, it's the answer to all your trade-related questions. We build recipes with definitive criteria and checklists for each strategy, each unique variable that you're going to encounter. I mean, the how, the when, the why, at what price. Earnings are approaching. What steps do you take? Okay? I want you guys to think about this for a second. Do you want to know, like, a piece of criteria? What happens when earnings are approaching? You guys want to see what a piece of criteria happens to look like? Okay, I'll tell you what. I actually have the class open right now. All right, and I don't mind showing you for a second here. I've actually got the class itself open, and I'm going to show you what a piece of criteria looks like. And again, you're seeing the class itself because I've been working on it for weeks over here. This is the kind of criteria that I'm talking about, that if, again, you're in PowerPoint over here looking at a PowerPoint, but check the option chain for skew. The most effective way to view the market for upcoming announcements is to review the option chain implied volatility. View the option chain from 0 to 60 days out. If you see it's going to be a difference or a differential of implied volatility from one expiration to another of more than 2%, okay, you have an earnings announcement in that period. That's the kind of stuff that we do, okay? And I'll show you exactly what that means. On Facebook, all right, But remember, on Netflix, I kind of balked at the idea. I balked at the idea of the trade on Netflix. You want to know why? Because it didn't fit the criteria. You have to look right over there, okay? And I'm like pointing it out, but you got to look right over here. And I will show you on every trading application. This screams earnings announcement right there. It screams earnings announcement. Avoid it at all costs. It's showing you that the earnings are coming out, and if you do the trade, you lose money. Can I sell options without ever earning the stock? Absolutely. This is just the beginning. I showed you one piece of criteria. To get into the vertical spread that I just showed you, okay, there are 11 definitive steps of criteria. Each one of those steps has another 4 embedded steps to it. Okay, you're looking between a checklist of like 30 different items that you're going to go and check, 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 check. I'll even show you how to execute these trades. This is what we're doing at the upcoming class. It's Guide to Selling High Probability Spreads. We're doing it next Saturday. It's a 4-hour class. I'm the trade instructor. The PowerPoint that I just showed you, it's ready. It's actually taken me, I don't know, I'm into that thing for about 60, 70 hours right now. The class is archived immediately and available indefinitely. All the slides with all the entry and exit criteria are made available immediately following the course. Additionally, I have to think about this because some of you are brand new to trading. You're brand new to trading. I'm a little confused as to what a call or what a put is. So what we do in this class, okay, and again, the class is coming up June 18th, exactly 1 week from today. It's a 4-hour class. You can start to view the Options 101 now, today. Don't wait. Just view it. It's a 5-part series. Each portion of the series, they're 45-minute videos, and there's 5 portions to it. I know there's a little bit of a time commitment. Additionally, we have the Options 201 course in here. So what we're doing is we're embedding these 2 classes to prepare you for next Saturday's class. And I strongly suggest, even if you have extensive experience trading, please go view, okay, these classes. We're throwing them in there because you want to have the right background before going to the class. The class, it's $297. There's classes people have gone to, they've paid thousands for. They won't, okay, hold a candle to what we're actually going to talk about in criteria. It's theotrade.com/trade. Okay, now let me show you a couple of the bullet points from the class, and specifically, it's not just about entry and exit criteria. Okay, again, the site is theotrade.com/trade. I'll show it to you in just a minute. The class is the Guide to Selling High Probability Spreads, and here's really the curriculum: how to sell the correct spreads to maximize the benefits of time decay. Okay, all the entry and exit criteria, that's what we've been discussing. Identify favorable candidates. Now, I am going to get into not so much technical analysis, but I am going to show you the most effective identification for these trade setups, how to identify the right risk reward, and you're going to know what the spread performance will be in any market condition out there. Now, again, consistency in returns, critical. Why so many experienced traders? I mean, that's what we started with today, is like you kind of hear around the water cooler, you kind of hear around the fire over there, the campfire. Well, a lot of experienced traders sell options. Well, we're going to show you how to reap the benefits of option decay without having extenuating risk. Okay. Again, stocks and indices that may be the best candidates. I have an entire, area in the criteria for candidacy, meaning that it'll actually show you the candidate like Google, Amazon. Let's just get into the exact candidates over there. What strikes and what expiration period, okay, you have to select to give you the highest probability. Again, probability is critically important, but you got to figure out the expiration cycle, when to open it, when's the best time to close it. And here's actually one of the biggest areas, and some people have no idea what this means, but I'm going to get into probability of touching. And that, it's going to transcend just spreads. It'll be used in all of your trading strategies. After you understand what probability of touching is in this class, again, I say the class, people have gone to classes for thousands of bucks. It's insane out there. You got to learn the right stuff to do, but you have to have the checklist. whatever you do in your life, you probably have some regime, some checklist. I mean, you get up in the morning, you brush your teeth, you walk the dog, you get the kids, everything has some degree of criteria associated with it. Okay? Now, or would you like access to every class we have ever done? So we're doing the class, okay? The class is coming up next Saturday. It's TheoTrade.com/trade to enroll for the class. But we're doing something a little bit differently here too. We will give you access to every class we have ever done and access to every class we will do for the next year. Okay? What this is, here's the classes. Okay? We actually, TheoTrade.com/trade. I'll show you the site in a moment. Here's the classes that we've done up until this point. But also recognize for the next year, we do a minimum of one class per month. Okay? The entire year of everything we do and every class we've already done is $9.97. Surviving the extreme volatility. Okay? We did this class because, well, markets were extremely volatile when I did this class. Iron condors. All of these classes have definitive criteria. This right here, if anybody has been to anything that I've done in the past, whether it's something at thinkorswim, whether it's something, again, I've been out there doing presentations for the better part of 15 years. The sell premium, that's what I do, and manage the risk behind it. This class alone is worth well over the $1,000 that you pay for every class. The high probability trading with in-out spreads. Somebody asked in the chat room over here, they said, well, do you always sell spreads? No. I live and die, okay, by selling spreads. Right now, implied volatility, a lot of spreads we're doing are what they call in-out spreads. We're actually buying spreads, but we're not going to have time decay moving against us. You will love the in-out spreads class. That happens to be, I guess, the most critical acclaim that I'm getting from classes, the high probability trading with in-out spreads. We have a class on covered calls because some people have just done covered calls. Did that class last month. Weekly options, specifically discussing weekly options. The options 101, the options 201, plus of a minimum of class per month. I say a minimum of a class a month. Doc Severson, we brought him aboard several months ago here at TheoTrade. Doc is going to be doing his first class this month. So we're actually going to do a class, all right? So we're all clear over here. We're going to do a class on June 18th. That's my class. That's going to be the class that you'll see right here, TheoTrade.com/trade, okay? And that's the June 18th class. We're also doing a class the week after. I believe it's June 25th. That's Doc's class. There's 2 classes this month, okay? Again, most people, what they do is they sell another class. There's nothing that we sell here other, okay, than everything in one package. For the year, I'm going to show you and take you through not only some of the classes that we've done, but some of the classes that we're going to do. And again, this is the site. I'm going to put this up here for a minute. You can email us, support@theotrade.com. Our phone number is on there, 800-256-8876. Now, again, I stressed to you. By the way, you can even chat in over here. So if you have a question specifically on there, you can come in. And when I say you can chat in, right over here where it says chat now, that's me. Well, that's a younger version of me. Really, it's not me, but it's one of my kids. But you can actually chat in right now if you've got specific questions. But I want to show you what this looks like. Again, the guide to selling high probability spreads class, that is the class. It is Saturday, June 18th, okay? It's a 4-hour class. It's archived immediately because you're going to think, I can't make it. It's early in the morning. I got a bunch of kids too, okay? And feel free to fire questions in over here because we're reading. So absolutely we're reading in here. If you go to the high probability spreads class, I just want to make this really clear, it's $297. All your bullet points that we've gone through, really, again, about criteria to enter and exit the trade. In addition to the $297, you're being given not only the high probability spreads class, but you're getting the options 101 and the Options 201 class. These classes, you start viewing them today, now. You just go enroll. It'll take 10 minutes for the system to authenticate you, and then you start looking at Options 101, the basics and beyond. And I think you guys will really appreciate these classes and all the slides and all the effort that's gone into these. I have done basics classes and options for 15 years, and I will say undoubtedly this is the best 101 class I've ever put together. It'll give you all the basics. Options 201 starts to get a little bit more extreme. Now, in addition, okay, there's another option. The other option is you pay $9.97 and you get, again, everything that we've ever done and everything that we're going to do for the next year. And for $9.97, it's the entire year. And if you missed anything, okay, we're giving you everything, okay, in the past as well. It gives you access to every single archive. Now, in addition to the $9.97, there is never a fee. That's something everybody, well, do I have to pay for a chat room? By the way, this does include a daily chat room. If you want to be in the chat room, it also includes us blasting out trade ideas to you. Here's some of the other classes. We're going to do classes, and this is future classes. Selling puts, calendar spreads, futures trading. If you want to do a class in futures trading, we're doing one. Pairs trading, intraday trading, okay? Technical analysis. We're going to get into a lot of technicals. Not so much me, but that's Doc Severson. That's what he does. Butterflies, okay? Broken wing butterflies. In addition to it, we even email you real-time trade ideas. So if you enroll it, again, I want you guys to recognize, for $9.97, people go out and they pay $1,000 for one class. We're doing every class we've ever done and every class we're going to do for the next year for $1,000. Okay, it's nothing, and all the trade ideas, because I already got like 5 different questions in here. Well, are you going to sell me this? By the way, forgot to mention, we're also going to give you any indicators or scans. If you need studies or scans, like people, they're like, well, you're probably going to charge us for a bunch of indicators. No, we actually give those away for free because we think it's amusing. Okay. And again, think about how many classes. I know lots of people that go to different seminars and so forth, and somebody just said, how many classes did you take at $1,000 each? A ton. I mean, people have taken, a dozen different classes, and they've paid, $12,000 for it. Okay, one of the things I'm trying to do is put an end to all of that. I want to show you, too. We show all of our trades in the TheoTrade tracker. This is part of the TheoTrade site. Okay, these are some of the trades that we have on right now, whether they're opened, whether they're closed. All of the trades are in here. We keep a TheoTrade tracker, so you can follow the trades from opening to close. We also email out every one of these trades to our members. Additionally, and let me show you something, talk about indicators. People love indicators, they love charts, they love scans, they love studies. Every indicator that we do, and if there's something that somebody else does, okay, we will put in here. It's part of the membership, it's part of the mentorship. We just put the scans in here, and some of these studies, you're going to go out there and you're going to pay a fortune in like technical indicators. I hate that stuff. Hate it. I want you guys to get this stuff down, not have to keep getting nickel and dime. You got to save your money for trading. Okay, this business is hard enough. Don't make it any harder by spending $10,000 on an education. Pay $1,000. After a year, you're going to love what we do. Okay? All the things that are archived are right here. There's member chat room. There's coaching sessions. Does this look overwhelming? You better believe it. Okay? It is overwhelming. But would you rather be overwhelmed or underwhelmed? I think almost everybody in here, well, I'd rather be overwhelmed, but it looks scary. Well, that's why we have the Options 101. That's why we do that stuff. And again, back to the archive over here, if you come into like coaching sessions, if you name a topic, okay, if you name a topic, I bet you anything we've done it. Like seriously, you think about a topic in here. I haven't broken down by months right now. Think about a topic that you're interested in. You want to learn about futures trading. Okay, where is it? Well, I can go into the February archive and I could probably dig out umpteen sessions on futures trading. Vega risk, tracking extreme options activity, all right, order execution, Greeks, all right, and it goes on and on and on and on. You want to know about bonds, okay? Here's everything you'll ever want to know about futures trading. It's all in here. It's again in the archives. We also have all the classes. Here's the classes that I talked about. These are ready. Okay, you pay the $1,000 and you go and you can watch the high probability trading, okay, with in-out spreads class. And I have to say, if you already understand options, you're going to love this class. So this is the class. You click to download the slides. It's all right here. Again, I'm going to answer a couple of questions over here. And I know that some of this stuff is a little bit overwhelming, but if you name a strategy, okay, you think of a study, I bet you we have it on the site over there. Okay, it's probably already in the site. Now, it's TheoTrade.com/trade. It's as easy as could be, just TheoTrade.com/trade. Our support email address, our 800 number. Again, it's your selection. But for me, okay, to provide the best education, okay, for $1,000 a year, that's what we wanted to do. We want to make a statement, okay, not only in the education industry, but I offer you this. You go anywhere in this business, anywhere, and there's tons of educators out there. Anybody can open up a site and call themselves an educator. You go anywhere, okay? I have a flawless reputation in this industry for educating clients. That's why TD Ameritrade, all right, had me running their education, not only for retail clients, I ran institutional education. I actually trained registered investment advisors for many years. I built the whole education firm over there and ran, okay, the education for over 7 million clients. Now, I want to be able to trade in front of you. To do that, I had to leave the regulated world. Question that just came in over here. Okay, and again, anywhere in this industry you go, you will not find education that's going to match the level at what we're doing here at TheoTrade. You can't find it at any cost, and that much I promise you. Okay, I don't make any like guarantees or guaranteed you're going to make money. No. But I will say this, I will promise you, you will get the best education and the best support of any place that you can find in this entire industry. Okay, so can you purchase it now and start later, okay, in August? Sure. You can start if you want to do that. I know some people are going to go on vacation over here. You purchase it now, okay? You start in August. It's going to be archived. However, I do offer you this because we're at the lowest volatility we have been in many, many years, okay? There's a sense of urgency on my part right now, probably more than typical. I see red on my screen and I don't like this market at all. There is so much risk facing us in the next just 3 weeks of trade. Summer is not going to be dull. It started off dull this last 2 weeks. It is not going to be dull. I'm telling you, you got to learn how to do this stuff. Okay? Now, moving up the list over here. Somebody asked, they said, after a year, can you continue for another year? Absolutely. Okay? You can continue for another year after that, and we will give you an option. After a year, if you love us, you can sign up for another year. That's up to you. It's $9.97 for the next year if you want to do it. Or you could just do $99 a month. Right? You just do a month to month. Again, I don't like the whole contract things. Nobody needs to be I'm not going to force your hand. Okay? If you want to do it for another year, fantastic. We'll tell you this. Our rate of renewal is almost 100%. The only people that have ever left us is like, well, okay, I just, I don't have time. And usually we talk to you. If you don't think you have time, okay, think again. We're actually doing evening sessions right now, archive sessions. And that's why nobody leaves really, because they're like, whoa, oh wow, found the time. We'll even do Q&A with you in off hours. That's what we do in these coaching sessions. We also do 5 coaching sessions, 6 coaching sessions a week, which is just you being able to ask questions, one-on-one over there. All right, so classes are recorded. Everything is recorded instantaneously. I think you guys will also love the technology that we use at TheoTrade. Technology is kind of our thing, so we're every bit an education company as we are a technology company. We use some very formidable piece of technology to be able to not only record but instantaneously play back. We have what's called a DVR. So if I'm talking during a class and you missed a minute, you can actually pause it, replay it, and then catch right back up. It's all DVR. Okay, so again, I like it. This is like buying a brand new Bugatti for $1,000. You know what? Again, I say this. This is going to be an experience for you guys that really want to learn to trade, and I am just unrelenting about one idea. Okay, I'm not always going to be the most upbeat. There's times where I'm going to be a cynic in the market. I hope you actually appreciate that. Markets right now have a tremendous amount of risk. I'm going to keep you in the know, and I'm going to keep the trades running out there to keep you out of harm's way. I mean, that's what we got to do over there. We have a tutorial on how to use the site. Yes, we do. If you need to learn how to use a little bit about TheoTrade itself, like the actual site, okay, well, we've got this member home over here. Once you've actually signed up, this is a video right there, how to actually use our site. And this is all the stuff, okay? And everybody gets everything. Like, I don't want you to think, like, when you're enrolled for TheoTrade, everybody gets everything. There's no, like, hidden, like, okay, well, we're going to charge you this for this. There isn't that. That's what I like to do. I don't want the nickel and dime. You want to be a member. You want to be able to ask questions. You want to learn this stuff. It gives you the ability to do that. All right? Well, again, it's TheoTrade.com/trade. I got most of the questions over there, so that's the tutorial on the website. Moving back over here. Ooh. Yeah, somebody was asking, Don, I've watched you for years. Jeff and others do the training. So years ago, I used to do a daily chat, and my partner at that time in crime, a gentleman by the name of Jeff Bierman, Jeff actually went back into the professional trading world. So that's something I toyed with for quite some time over here, but I much prefer trading my own capital. I got to the point in my career, so I was very, very early on in thinkorswim, and I was really fortunate in that circumstance when we went through a number of acquisitions. The company went public, so I have traded for myself since approximately 2001 and continue to do so. So I did not go back into the professional trading arena, although there's some interesting offers out there to run money. I'm just, you know what? I like coming out here and I like doing this stuff. And, you know, there's a couple of times I figured, I'll hang it up, and I'll hang it up, and, you know, came out here to Scottsdale, Arizona. Why? Because it's 110 degrees. But I came out here. There's a lot of family that's retired from trading in and around this area, and I never wanted to stop. Never gonna. You know, I just turned the big 40 years old, and I feel pretty strongly about just educating. You know, the amount of time it takes every day, well, I trade anyway. You know, and as my wife always says, she goes, you know, even if you didn't educate, she goes, you still would be talking to your screen, so you might as well put a microphone in front of your face. And that's the way I've always thought of it. And I'm like, I'm going to sit here and trade anyway, so I might as well just put the microphone in front of the face and just go for it. I want to thank everybody for joining us today. By the way, if you do some of the trades, when we do trades, we will email you out the trade immediately, and the trade gets posted into our chat room, so you know that the trades are in there. Okay. If you are a beginner paper trading, we can actually show you where there is a great paper trading site, and you can kind of paper trade along with our trades. For those of you that are TD Ameritrade clients, one of the last things I'll leave you with, we have a very exclusive offer with TD Ameritrade regarding commissions. I cannot and will not offer you what that commissions is. You must be part of TheoTrade in order to get the commission discount. That's one of the agreements I have with them. And again, we do not in any public forum enunciate what that commission level is. You will be rather impressed. It is better than anybody else will state publicly. Of course, that's why I can't state it publicly, but we have a drastically reduced commission schedule. If you have an account, fantastic. You get the commission discount. You cannot call. We have to give you a very specific individualized code for you to get the commission discount. We will give you the directions to do that. If you do not have an account with TD Ameritrade, we will give you a link to open the account, and it will automatically qualify you for the discount. Only thing in there, okay, you have to have a few $1,000 in the account. You get the discount over there. That's it. So I want to thank everybody again for joining us. Okay, we'll be here to answer some questions, not only in the chat room, but you can also email us. Hit us up on the phone number. It's 800-256-8876. Thanks, everybody, again, for joining us here at TheoTrade on your Saturday morning. Have a great afternoon. Bye-bye.